That was a great panel, a lot of conversation, a lot of interesting stuff got raised. We're probably going to touch on some of those issues here as well, but we're also going to take a little bit of an optimistic view in terms of new things that can happen with this stuff. So
hold on 1 second. Excuse me, for all of y'all that are talking in the back, we can hear all of that. So if you're not going to come have a seat and listen, then please, can you figure it out?
She is much better at this than I am. All right, cool. Okay, so with that, I'm gonna let the panelists go through a little bit of a 5-minute introduction and give us a little bit of background on themselves in terms of how long they've been in the space, what they're doing, and that'll set the stage for the questions we'll deal with. Daisy, over to you.
Okay. Hi, everyone. My name is Daisy. I'm the director of Blockchain for Social Justice. And our whole goal is to make sure that marginalized communities, policymakers, direct service providers know about blockchain technology and how it can be adopted and used for social impact issues. And I came into this space, actually, I learned about Bitcoin in 2013-14. So I guess I'm a veteran, whatever that means. And I learned about it. Yeah, an OG. We'll talk about what that means later. But I learned about it because I used to actually work here in San Francisco doing public policy, public health work, program implementation, evaluation. I'm starting here in San Francisco, then going across the state and then nationally, and then saw blockchain as a really powerful tool in order to address some of the disparities that we were seeing. So, yeah.
Awesome, thank you.
Thank you. My name is Corey Harris. I'm the growth manager for Dispatch Labs. Dispatch is a platform for writing data-centric smart contracts. And I've been following the industry since 2009. I first learned about Bitcoin when I was in college. I majored in economics, so I was really fascinated by the implication of economic theory at play, a new form of economics at play. And a year ago, I started a group called Blockchain, which is a platform for learning about distributed network technologies and platforms. So for me, I'm really fascinated with how, again, I learned in school about classical economics, neo-classical economics, and when you look at the proliferation of tokens and cryptocurrencies, you can explain it with those existing economic models. So being able to create new theories and models that are actually more realistic is the part that I'm really attracted to. Thank you.
Hi, everyone. I'm Ronak. I'm a partner at eToro Capital. eToro, it's a mid-market global investment bank, and recently they got into security token advisory and helping with fundraising. They're currently the leading BD in the space and based out of Houston. I originally got into this space back in 2012 when I was working at an investment bank, looking at new alternative investments to see how we could potentially diversify a client's portfolio from a wealth management perspective. And full-time, I guess it was around 1.5 ago, 2 years ago.
Hello, my name is Jordan Davis. Spent the first 7 years of my career in financial services on the retail side. So I was working directly with individuals and families to help develop, implement, and maintain comprehensive wealth plans. In May, I made the leap into blockchain, so I'm probably the least veteran person when it comes to blockchain and crypto, but I'm in a really interesting position in that I work for Tokenized, which is an automated compliance platform for security tokens. So we're a completely white label platform that takes care of KYC, AML, presentation of legal terms and conditions, payments processing, as well as signing of offering documents. And also a institutional grade custody solution that we set all of our issuers up with. I've talked to hundreds of different prospective projects that are looking to venture into a global fundraise, and I would say that very few of them actually end up moving forward, and partially because I think a lot of people that get into, the people that I've talked to at least, think it's going to be really easy, and it's an easier way to do fundraising, but it's actually, I would argue, more difficult to do it in a compliant manner. Yeah, that's me.
Cool. And just a quick background. So I work with a company called Tyrion. I'm also an advisor to a number of companies in the more traditional startup world. I advise some folks in the blockchain and the cryptocurrency ecosystem. And so I bring a perspective of business, tech, regulatory as I'm dealing with all of those issues across a portfolio of companies I get involved with. So with that, let's hit some, first let's hit a question from the last panel as a means of getting us into first that space and then forward. So I'm going to make a provocative statement here. Can we just come out and say that utility tokens are dead and never existed to begin with? And anything that represented itself as one is in for some trouble from regulators. Ooh, good thing the regulator left. Ooh.
I'll start with that. Well, I've worked in securities for 10 years, right? And for me I've always had, and I'm securities licensed. So I've always had a responsibility, a fiduciary responsibility towards my clients. I'm also an engineer by training. And what got me fascinated in this space is the token economics behind a project. And so I personally think that there is a need for utility tokens. And in fact, I think the future, the platforms of the future are going to be more of a STO and a utility token combined in one platform, because utility tokens are great for governance. And there is a need for security tokens because that's how you regulate them. That's how you KYC and AML and you make sure the client or the investor is accredited. So I personally think that there is a need for utility tokens. But it really all comes down to it being structured properly and not poorly.
I had a question for you. You said STOs are better for governance.
No, I said utility.
Utility. Oh, okay. Well, what I was going to say in regards to what I've noticed is that most of the tokens creators, they don't understand that what they're trying to do is modify or disincentivize behaviors. And when you look at their marketing material, it's all about buy my token, buy my token. So I wouldn't necessarily say that utility tokens are dead. I think most entrepreneurs just don't understand that they're doing behavioral economics. And one of the things that I see in the future, which is one thing that we at Dispatch are doing, is that we're actually releasing our platform first before we're actually asking for a public sale, right? And normally what you see is again, you see companies kind of overpromise in their white paper, in the technical piece, and then they release their platform, and it doesn't do what they say they thought it would do, and they end up doing different use cases than they anticipated. So I think with more clarification from legally, and then there just needs to be more people in the space who understand behavioral economics. Like the way I would describe money is that it's not a noun, it's a verb. So how do you take your token and actually think about what behaviors, how do you create more engaged users on your platform for them to actually get value out of it versus just buy my token, so.
I don't think the utility tokens are dead. I think what's going to end up happening is there's only going to be a few specific projects really in the retail and financial space that can incorporate a utility token. And I see the utility tokens really being for like coupon type of situations like rewards, incentives, and for industries that have a hard time with dealing with the existing banking infrastructure like the cannabis industry. I definitely see that there's going to be a need for utility tokens where people can basically transfer their money from one aspect into another to engage into that in that market.
Just a couple comments on that question. I don't think that the utility token is dead. I think the idea of it is brilliant, but I think where that term got abused was, a lot last year, where people used the term utility token to get around regulations in order to raise hundreds of millions of dollars. And the term security token, I think also that term gets used incorrectly a lot of times. When we think of a security token, it's just taking the necessary precautions to ensure that you're raising money compliantly in any country that you're accepting money from, and that you're onboarding investors appropriately based off of where you're accepting money from as well. But just my 2 cents.
Yeah, it's a hard question, and I made it provocative mainly because I don't know the answer. When I see the movement of token prices and things that behave like securities, I'm like, well, these things look like securities. Whereas American Express points do the incentivizing, do all of these things, but the price never fluctuates. So the question of price fluctuation as part of the model is also a question, but again, no easy answers in this space.
Yeah, and also to add to that too, like I've created some incentives for our company, and ours is a utility once our platform gets released. But then there's certain incentives that I wanted to create that would keep people more engaged. Some ideas that I pulled from the banking industry with CDs and stuff like that, but that would make us a security, so we didn't do those particular incentives.
Well, and that's great.
Yeah.
I mean,
because all it takes is one attribute to make your utility into a security.
Right. And I think maybe it's education, understanding where the lines and the limits are. And again, I think that's where we all need some clarity in all of this. But yeah. Sorry.
And I think a lot of what happened is there's some really smart, innovative entrepreneurs in the space, and they saw people that they probably deemed as not as smart as they were raising all of this money, and just went out and tried to do it themselves, instead of surrounding themselves with top-tier professionals and running the fundraise like an IPO, like they should be running a fundraise. But
so when you guys in your respective constituencies that you deal with, and you're helping them think through either issuance of token since you're all here, I presume you have been dealing with this issuance of tokens in one way or another. How do you go about advising either your constituents or the companies you work with closely as to how to deal with this, like how to think through it? What are the steps they need to consider?
We actually host classes. We have an incubator coming up on actually how to build your own blockchain project. So the first things first is, what is the use case? Because from the use case, then it's going to dictate what are the different transactions between the different players in your ecosystem. That's going to either make it a utility or a security. Then we have to talk about, is it going to be what consensus model you're going to use? When you talk about those two things and then get those down on paper, then you can start to think about, okay, is this token a utility or is this token a security? So for anybody who is in the business of wanting to launch a token, you have to think about those things. And then I personally can't give any legal advice, and we are on camera. So I would say, talk to, look at different platforms, talk to folks like Indiegogo, talk to Swarm, talk to Tokensoft, right? Talk to these organizations that actually have the software and the platforms necessary to do security token offerings or token sales in general, so you can get good on what you're going to be doing. And then also, I would say, talk to some of the dinosaur law firms, the old school law firms that have been in the securities game for many, many years, because they'll also be able to help you with the legal ramifications of what you're going to be building. So we have a really good lawyer, and they've been in the game for many, many years. And the way, when we explained our project to them, they were able to help us understand that what we are doing is not only just, we have a dual token economy, so we can use our utility token for our token sale instead of having to go through all the different regulations. Just like Ronak said, those different platforms that have a dual token, those are gonna be really some of the popular platforms out there.
I would say read the SEC website where they show the subpoenas, where you can easily avoid common mistakes. The favorite subpoena that I read was from Tomahawk. I think they were trying to raise like $5 million. They made a bunch of mistakes, but the biggest thing that I pulled from there is that they see most of these tokens on the market as penny stocks, which was like a real mind blower for me. Other stuff I learned is that you can't, you're not supposed to pay Americans as far as compensation with a security. So you can't pay someone to market your product when they consider it a penny stock. So again, I would say read those SEC subpoenas just to get an idea of what the SEC is looking at. I mean, they're dropping a bunch of hints on how you can avoid from getting in trouble. And generally speaking, I think if you're doing all the necessary things to be compliant, they're not going to go after you. It's the ones who are just blatantly just saying, I'm decentralized and, I'm selling a security, but I don't want to register it. So, yeah.
So when it comes to issuing a token, this is what I've came across. like for instance, some asset-backed tokens. You look at some of these STOs, like these asset-backed STOs, and you look at the actual asset, and it's not a quality asset. So some entrepreneurs, business people are saying, well, I can't raise money for this particular asset traditionally. Maybe if I put a label, an SEO label on it, it'll make it more sexier, and I'll go raise some money for it. Which, how we look at it, at eToro, even from like an investor standpoint, make sure you do your due diligence on the actual founders of a project or the backers of an asset. And when you're looking at different issue models, like do I do a utility or a security, it all comes down to the token economics, right? So do you really want to have a token that has some sort of a utility within this infrastructure, within this ecosystem, or are you trying to raise some capital for either a debt or an equity, or are you trying to tokenize some sort of a dividend, right? So how we look at it is, first and foremost, make sure that the actual underlying project is a legit project, to see if there's a real need for a token, not just say that, well, we really haven't had success to raise money for this particular REIT or this piece of real estate. Now we're going to issue a security token so that we could just raise. Because I've came across a lot of those projects, because that's what we do in eToro. We advise on security token issuances. We're more of an end-to-end platform, and we have a BD. And the founder of the company, he's been an investment banker for 20, 30 years. So make sure that if you're an investor, to look at the underlying team project, just like do your due diligence as if you were doing due diligence on a traditional investment.
My advice would be, don't cut corners. I think a lot of really good entrepreneurs try and get things done with, as the smallest amount of capital possible. But when you're dealing with the SEC and global regulators, probably not the best idea to cut corners, because you're going to, if you're an easy case to win, they're going to come after you. If you are hiring, top tier legal counsel, technology partners, PR, marketing, and you're running it like a global funder, it should be run, then you have a good chance of making it. And I mean, the other thing is, if you're cutting corners on your fundraise, and regulators do come back to you, you're going to have to dissolve the entire project anyways. So, you got to keep that into consideration as well. There's been a number of cases where issuers have had to actually refund all of their investors plus some, and deal with a number of other issues. So we advise projects that are really serious about doing a security token offering to at least have $1 million to $5 million budgeted to get all of these things done correctly. So that's the tech, the legal, the PR, the marketing, the road shows, depending on what countries you're launching in. If you're trying to do it for less than that, you should really think about, if this is the best approach for you.
Yeah, that's a great point. I think that, and we heard before about needing great lawyers. It's really a staff of lawyers you need. We talked about the SEC, but there's the CFTC. There's FinCEN. There is the IRS. And there are specialists who are lawyers in each of these areas. So when you say, I have a lawyer, that's not helpful. I have a team of lawyers. That's helpful, because there's really a lot of parts. I think about, call it the last few months, the cost that companies who were doing ICOs had to bear was somewhere in the $1 million to $1.5 million range, and that included about between $300,000 and $500,000 for legal, about another $600,000 for tax accounting, and then the rest for the platforms that they were going to use in order to launch their token offerings. So it is not an inexpensive endeavor. And while the amounts raised can seem outsized, the risks that go with that model are also fairly outsized. So this also brings up what's happening with this notion of when we talk about security tokens, we should also distinguish that there are asset-backed security tokens, and then kind of the stuff we've known as ICOs to date will probably look more like non-asset-backed or token-backed security tokens. And so with these new models, it also seems like a whole new category or a whole new world is opening up. And Rona, you mentioned REITs, for example. And what's interesting to me with REITs is they're fairly expensive today. In other words, you have to be an investor in the 200K or higher level. And as part of that, it's the administrative hassle. Not just that you're accredited, but just the administration of it. However, with tokens, if you're a $10 investor, if you're accredited or have the means, you could buy a $10 token. It's no more hassle than a $1 million token. So as you think of these opportunities, what do you think is opening up for the security token world that we may not have understood to date?
I think so. I helped Deutsche Bank launch their first retail REIT, and this was 4 years ago when banks started realizing that the future of fundraising capital is via retail investors. And when I say retail, in the traditional banking world, retail is still considered accredited. So rather than going to a CalPERS or the Yale Endowment, you go to the independent broker-dealers, the RIAs, the family offices, and after months of due diligence on whatever particular product or fund you're offering, they agree or approve that product on their platform. They start allocating that product within their clients' portfolios, which happen to be accredited investors. How I personally look at REITs and fundraising for REITs, something that made me really frustrated was, if we had a hot product, let's say a Deutsche or another investment advisory, only the top tier clients had access to that. And I'm a conscious capitalist. To me, I went through a phase of thinking, gosh, the rich are getting richer. Like, I have this really amazing product and I'm going to the top investment advisors, the top family offices, and they're giving it to their top percentile, their top clients. What I love about STOs, it's the global outreach and the democratization of access. So rather than, marketing a REIT via an IBD, you could put it on a platform like one of those regulated platforms. It could either be eToro, or I don't really know what the other platforms are that are.
Indiegogo has
Indiegogo.
one.
And there is more of a global outreach. It's more of a product or fund to direct to investor outreach. And rather than just marketing in the US, you could raise money via like 50 countries and give other people across the globe access to that hot deal. So that's like one of the beauties of STOs. It's the actual it's the global outreach, and yeah.
And Daisy, when you start to think about all of these people you're dealing with and teaching them about how they can take advantage of this model, what's the opportunity you see tokens bringing to their businesses? So what are the things that they may not have thought about that you're kind of helping them understand?
Thank you. Well, because we're really focused on the social impact piece, they now see how these tokens can, one, help them go around the traditional philanthropy system, which is super broken and based on a lot of nepotism. Two, how it can actually help them improve some of the metrics or create some of the metrics that they want to see. Like, for instance, there's a project that we had a hackathon in June, and it was a project trying to help end recidivism. And recidivism is basically re-entry into the incarceration system for folks who've been formerly incarcerated. So they created this project, they won the hackathon, and now they actually got investment to build that platform out. So their tokens can actually help incentivize some of these behavior changes that we need to see within the social impact community to get to the metrics that funders and policymakers and all those folks, they want to see. Because you're trying to tell people, hey, stop smoking. Hey, stop committing crime. Hey, don't go to jail. Hey, graduate from high school. Okay, and I'm poor. And I'm traumatized. So what is on the other end of that is, okay, let's incentivize you to change your behavior. Money always works. I'm gonna tell you right now, in the youth programs that I work in, even till this day, what do we give the young people to come through the doors? We give them gift cards. we give them things, right, to incentivize their behavior. And we have to start getting into that notion that if you really want to have like long-lasting behavior change in the social impact space, you're gonna have to incentivize folks. So that's where we really see change. And then I think another thing too is helping to build infrastructure in the wake of our current infrastructure failing. It's no mystery. We currently see what's happening under this administration. A lot of the different social social welfare systems that we see, they're going to collapse. And blockchain and creating security token offerings, and creating security tokens that are asset-backed are going to actually help in triaging or creating a safety net when those systems do fall down. Because there are people who are going to fall through the cracks. And some of the things that we see out, like the homelessness, is going to just increase. So, yeah.
I like STOs from the standpoint, I think they're going to bring in more institutional investors. I don't see them solving the adoption issue because when you look at adoption, again, there's not enough real use cases for cryptocurrencies. And I went to Canada and used my American debit card and was buying stuff. Like the experience with cryptocurrencies needs to be that seamless, and I don't see STOs doing that. Again, I do see it bringing more money to the industry, potentially bringing down less volatility, potentially. But yeah, I don't necessarily see STOs as helping cryptocurrencies being more adopted.
I think that the topic of STOs and blockchain and financial services firms getting into the space is an amazing opportunity for us to take a look at what works and what doesn't work, and what has been working, what isn't working, and really puts those conversations into the limelight so that we can really start having good conversations around what do we want the future of our financial system to look like, as opposed to focusing on like what's going to be the next hot fund or the next hot package of different securities. I don't think that's going to change anything because we get that, every year. I mean, being in financial services for 7 years, there was always a new fund. There was always a new separately managed account. There was always something that we needed to position to our clients. And so I don't think that aspect of things is going to change. And I think the more institutions get into it, the more people will see it as legitimate. But financial services firms aren't going to change their behavior, which is, let's see how we can make money packaging these things up and getting them to retail investors. Yeah.
Well, this is, when I was getting into STOs, I think I do separate them a little bit in that when I look at their application into the traditional world, I look at removing friction. I look at improving the speed of transaction or movement of securities. So, for example, you take a venture fund. Today, when you're an LP in a venture fund, you have a certain commitment you're making, and you have a 7 to 10 year lockup period. The challenge is that you can get out. An LP can get out. It requires a lot of paperwork. You take on what's called an illiquidity discount because you're selling it to another LP, but again, there's no liquidity there. And so there's a lot of challenges. Not only that, there's a lot of cost. And I believe it might have been somebody at eToro who wrote this, but the costs are excessive. And so simply on that basis, if you could reduce the cost of transferring that security from one LP, accredited LP, to another accredited LP, the cost you could remove from that is tremendous. And so, wow, creating liquidity in that world, which exists, is simply an optimization of that world. And maybe you know a little bit about what I'm talking about. I don't know if you, I don't forget who wrote it at eToro, but yes. Yeah. And it was a great write-up because he broke down the costs of a traditional situation with respect to managing an offering, and then how you might be able to reduce that significantly. And I also look at this in terms of, and if that works there, then it can work in places that we never expected it to before. And this is where I start to think about the things you're talking about, because I'm like, wow, if you could really start to break it down a little bit and make it easier to get people involved, maybe these will speed things up. So as you see the world of tokens evolving, we've hit on maybe a couple of things. Maybe I've missed a few. Are there other areas that you think will be affected, whether they be socially, economically, legally, that will be affected by this next generation of tokens? So think of ICOs and what we just went through as kind of coming to and maybe not so clean slowdown, but we're moving into another phase. What does that next phase look like? And Corey, why don't we start with you?
Sure. No, it's fine. I think right now we're still in the infrastructure stage of distributed networks. Platforms, I like to use distributed networks versus decentralized, because for me, decentralized means that you want to avoid paying taxes or government intervention. Saying distributed is more akin to what we are trying to create. Oh, that's a good song, though. So right now, I think, again, we're in the infrastructure stage. So there's new platforms coming out that are promising high throughput, one being ours. And I think once you see that happening, then you're going to see better token economic models. So to kind of go more deeper into it, when you look at proof of work chains as an example, they're very costly when you're building a dApp on top of them, right? So anytime you issue a new token on top of a proof of work blockchain like Ethereum or even Bitcoin, that limits the incentives you can create, because it literally costs you something every time you mint a new token. So the next wave of platforms that will be more adopted will be have no transaction fees like ours. And once we see more platforms that have free transactions, then that is just limitless amount of token incentives you can create to get people, to get kids to go to class, to get them to get their GED, or just to be able to think more long range, right? Because if you look at the apps that actually built on top of Ethereum, in their white paper, usually their biggest cost is their gas fees, right? And the gas fees go up when the market goes up, right? So once we see better platforms that have a lower cost and that we're able to figure that out, then you're actually going to see I don't think we can even imagine the type of incentives that we will be able to create, because it'll be literally no limit to them. So.
I can add to that. So everyone talks about the liquidity premium that STOs have and all the benefits, and let's tokenize the world. But in reality, it really comes down to what's going to be the #1 consensus model used for these STOs. We really don't have one right now. Proof of work, proof of stake, none of them really are the best consensus mechanisms for security token issuances. And also, what's going to be like the main platform for issuing these tokens on? Is it going to be Ethereum? Is it going to be EOS? Is it going to be Stellar? I mean, I personally think we still haven't created a platform, whereas most STOs are going to be issued on. We really haven't. So it all comes down to like building layer 1. We need to really focus on building the infrastructure layer before moving forward and wanting to tokenize the world. Because in reality, yeah, you could tokenize everything, but if the infrastructure is not there, and if we haven't created the liquidity, if we haven't created products for large institutions to use, I mean, there is going to be no buyers for it. There is going to be no way to transfer these efficiently.
I don't think we have any clue as far as what this world is going to look like over the next 5 to 10 years. I think in the next 5 to 10 years, we'll have a much better idea as far as the impact that these new technologies are going to have on how our society interacts, especially globally. I mean, like right now, for example, our technology is enabling people to compliantly raise money from around the world, opening up opportunities for people all around the world to participate in different projects that they believe in. And I think the next step is going to be making it easier to travel and spend money, and especially cross-border payments, just really evolving our financial system and how we spend money and how we support ourselves.
Well, I just went to the Black Africa Blockchain Summit in DC, and there are a lot of amazing projects coming out of there. And even one of the women that was on the panel, she was like, the way that I got paid for my taxi is using my telephone. And she lives in, if I believe so, she lives in Kenya, right? So it just goes to show, like, America, we're gonna just be behind in the crypto blockchain space because of regulation. So that's one piece. And I think another thing that we should be looking at is what are some of the different corporate mergers that are happening right now? Because what I do see is some of the bigger organized institutions buying out some of the smaller ones, and then those companies going ahead and adopting different forms of blockchain technology that are going to make some of the other projects obsolete in many ways, because those bigger companies, they already have the money to pay for compliance, they have the money for the developers, they already have the infrastructure and the connections, right? And then I see the social impact projects really creating this mass adoption that we want to see. Do I see a world where it's run on crypto, which is what some people want? Absolutely not. And I think that's a terrible idea, because we do live in a fascist system that would love for that to happen so they can flip the switch on and off and control it how they want to. So that's where I really see the ecosystem going.
Cool. If you have some questions, I'm ready to take them, so just put your hands up. I'm going to keep going unless I see a hand raise. Really interesting statement there, and I think by fascist you're referring to the corporate state that we deal with, and that's a crazy place. We are seeing a lot of merger activity even within the space. Circle acquiring Poloniex. Poloniex being kind of the Wild West of crypto exchanges, all of a sudden entering into what would be arguably in our space probably one of the most buttoned down exchanges. So boy, it really starts to play in my head, and I had a brief exchange with the person from Circle as she was leaving, because I really wonder what a day in her life has to be like, dealing with how do I take this thing that is an unregulated exchange and make it regulated, right? So as we think about this next generation, all of these exchanges that have become popularized, whether it be Binance, Poloniex, Bittrex, all of these folks, they're all dealing in, at least from a US perspective, unregistered securities. We're moving into a world where we hope to bring in more registered securities, and there's a couple of new exchanges emerging, but they're not fully up yet. What's going to happen in this? How are we going to bridge this gap? Because the ones that exist are not going to enable US investors and US participants. The ones that are coming aren't yet there. Any views? I mean, and I know, Jordan, you've probably dealt with this with respect to Tokensoft, and Rona, maybe you're dealing with this as well on a day-to-day basis. But Jordan, let me start with you. So what's going to happen with the bridging of, like, you're helping companies do ICOs or get registered and have all of that happening. Where are they going to get liquidity for the stuff they're doing on your platform?
We'll find out soon, I guess. We do have a public partnership with Open Finance Network. There are a number of ATSs that are kind of wrapping up on
ATS for the crowd. Just what does that mean?
Alternative trading systems. So it's basically the ability to create a marketplace for these private placement securities. So I think we'll know a lot more over the next 6 months to a year. I think the landscape will open up. How we've been launching projects is we try and stay agnostic to it. So if an issuer has relationships with exchanges, they can go about and get their tokens listed on them. We don't try and keep all of that in-house. We try and enable our issuers to have all the tools and resources necessary to really run their own global fundraise.
I mean, I see it as we're going to have a lot of M&A activity. I mean, we're already seeing it right now. So saying non-registered exchanges buying actually security exchanges or regulated exchanges. So how I see this path moving forward is just a lot of collaboration, a lot of M&A activity. Yes, there are going to be some platforms like Ontoro, for instance, they want to be an end-to-end, like from the day you issue a token all the way to secondary trading, and obviously the market making, which is the liquidity provider, because that's the main key. It's who's going to be the main liquidity provider here, and liquidity is not given; it's really created. It comes down to creating pools of capital, or somehow luring the institutional investors in. And how do you get an institutional investor excited about a product or a project or ecosystem is you have to somewhat cater to them and create products that are attractive to them. Because these folks, unlike raising money via credit investors, to raise money via an institutional investor sometimes could take years. You can't just walk into the Yale endowment and say, hey, I have this one product. And I mean, sometimes it takes years of due diligence if they're not really familiar with what you're trying to offer them, or if they're not familiar with your entity.
Cool. Any final words? We're going to adjourn. So any final words for the audience before we go?
Don't cut corners.
And with that, thank you very much. I think we have a few-minute break right now, and the next panel will start at 11 o'clock as the Decentralized Exchanges panel. Thank you very much to our panelists. Really appreciate it.